It's a tough drill for the small businessman. The state of New Jersey, and by the way, it's not the cash audit regime is not limited simply to the state of New Jersey. New York is quite aggressive in their cash audit of small businesses. So whatever I say for New Jersey clearly applies to New York, and maybe even New York's even worse if that's possible. But the New Jersey has created teams, 20 as I recall, 21 field teams, to go out and audit the small business person or business, and their primary focus is on sales and use tax and corporate business tax, and so and their mantra, if you will, is that compliance. You know, they're there to ensure that the small businessman complies with the tax laws, pays the sales tax and the CBT, corporate business tax. The state has actually placed special emphasis on the small business. Now, I don't know how many of you are involved in cash audits, but they can be quite invasive, take a long time, years. The one I was at yesterday, the tax years are 206, 207, 208. The assessment was made a long time ago. We've been in appeals now for 2 years. And of course, as you know, interest continues to run, penalties continue to run, and often the tax bill, the penalties and interest far exceed the tax liability itself. So it's a really difficult point for the small businessman. In fact, it's almost as though the state comes in with a gun and a mask and says, you know, hand over your money, so to speak. The basis for the tax audit is the vendor or the business must maintain proper records. Okay, they must maintain records of every purchase, sales, invoices, receipts, statements, memorandum, etc., showing what you have to show is not only the details of the sale, but the details of the exempt or non-exempt aspect of that sale. You have to have detailed records that fully describe the transaction. Okay, so and especially in New York as well, if you fail to have that level of data, if the state can't come in and audit and determine, you know, your sale, what you sold, what you collected for sales tax, was it exempt, non-exempt, etc. If you cannot produce that record, well, then your records may be unreliable, and if they are unreliable, the state can now make an assessment. This is a continuation of the regulations requiring the taxpayer to maintain, among other things, the cash register tapes, which it should maintain, and every record of every purchase as well. Now, the time frame, if you'll notice, is that the record must be preserved for 4 years from the date of the filing of the quarterly period of that sales tax transaction. 4 years. Now, of course, students ask me, how long should you keep records? Well, even though the regulation may say 4 years, you know, my advice is you keep records as long as they are relevant. And that may be a lot longer than 4 years, because as I told the students Saturday morning in my research class, records are your friend. And as I tell my clients, you know, you need to maintain records in sufficient form that they are auditable, because if they're not auditable, then that's where you end up in trouble. This reg is important. I was able to stop a significant assessment based on this regulation. The the NJAC provides that when a taxpayer maintains summary records showing total receipts and taxable receipts, then the individual items can be disposed of. In this particular case, it was a restaurant, did not have cash register receipts. I was actually eating at the restaurant at the time, and the owner came up to me and says, well, you're a tax lawyer, can you help me out? Okay. Spoke to his accountant, turned out that they didn't have any cash register receipts, and the issue was whether they were going to get assessed with a very large assessment. I said, well, what do you use for your accounting systems? Well, we use QuickBooks. Well, does the QuickBooks have a summary, daily summary? I don't know. Let's find out. So it did. It had a daily summary of the transactions, including cash transactions. And it says print them all out by month for all the audit periods. Print them all out, put them on a table. Auditor walked in, took a couple swipes at the records, walked out. Okay, no change. Okay, no change. Records are your friend. And so if you know what you need to maintain, that can save your client a whole lot of pain, suffering, and money. Okay, money.